So over the last 2 months, I've been able to secure over 4 consecutive payouts from one single prop firm. And in today's video, I'm going to break down some trades that I took that enabled me to do so. For those of you that are new to the channel, my name's Antonio. I've been trading for 8 years now, and I'm bringing you on this journey with me to show you what it's like to make a living from the markets. And if you're not subscribed to the channel, make sure you hit that subscribe button so you don't miss any more content. And as always, if you want to join my team where I send all my trades every single day, just click the link in the description below. For now, let's get straight into the video. So first things first, this is my funding pips dashboard. If you've seen my other videos, you've seen how I've basically secured a payout before. And if you're watching this now, this is now my 4th consecutive payout from funding pips. First one was on April 17th for 4,000. Second one was May 2nd for 6,000. May 13th for 11,000. And then June 11th, the most recent one, for $7,000. All been paid out, all landed in the bank. Really, really good. One thing I do want to speak about though is just to let you guys know that this is a 100K account. This is the account, and it is currently down. So I've got my payout, I'm still trading on the account, but it's currently down almost 5%. So just understand, I'm not Superman. I can't just catch wins after wins after wins. It's inevitable that eventually this account is going to go. It's, eventually going to get blown, but I have other funded accounts, which is what I'm going to talk about now, to diversify my portfolio to ensure that if this account does go, I have backup. Another thing I do want to speak about is, obviously the title of this video is prop firms worth it in 2024? Now, to answer the question really simply, yes, they are, if you're a profitable trader, because I've been paid out over 25K from this one single prop firm alone. And the cost of this challenge for a 100K challenge was $500. So I paid $500 to get about a 27K return. The risk to reward is there, the ROI is there. So in my opinion, prop firms are definitely worth it, but it's not easy, okay? It's never going to be easy. You have to understand whether you have the capability to do so. For example, what you're spending on accounts versus what you're going to get out of the accounts. For example, if you're someone who has spent 2K, 3K, 4K on accounts, yes, you might eventually get that account, but are you then able to actually recoup those losses that you spent on the challenges and make more than that 3, 4K? You have to be able to use your data that you should have accumulated over your years of trading to tell you whether you can actually do this. And that's just a bit of advice for you guys. So anyway, that's funding pips. No, next one I want to talk about is alpha. So this has recently been paid out. If you watched my last video, I was talking about it there. So the first thing you can see is the first payout got rejected. The reason for that, don't be alarmed. The reason for that is because I didn't do 5 trading days. I wasn't aware that you had to do 5 trading days on the live account. Apparently you do. So had to wait, 2 weeks for the next payout. It is what it is. And the next one got approved. As you can see, it went from 389 to 362 because I was placing small trades basically every single day just to get the 5 trading days done. I don't know what the point is, but it is what it is. But that's another thing, right? So 6th of June to the 20th of June, that's a 2-week gap. And when it comes to solely relying on prop firms, you got to remember you're putting your income in someone else's hands, and you're going to make mistakes like I did here. I didn't realize I had to do 5 trading days. In that 2-week window, I could have had bills to pay for. I could have had, something I was looking to buy, and I couldn't because I had to wait 2 weeks. So it's something to think about when you're trading on these prop firms is, really diversifying your portfolio and understanding that, yes, it's a great opportunity to make some income, but at the end of the day, that income isn't in your own hands. You're not in control of that. It's another company, the company that you're trading for, they are in control of the capital. Okay, just remember that. when you are using these prop firms. But anyway, that's been paid out now. It's landed in the bank, 6.3K from Alpha. Brilliant stuff. Next firm I'm trading with is Funded Next. Okay, this hasn't been paid out yet, but this is my live account, 200K live account. I'm currently up 14.9K on the account. I'm not trading on this anymore. This one is hasn't been traded on. Kind of a good thing I didn't trade on it. I actually traded on my Funding Pips account instead, which you saw was down 5%. I made this one go into some profits after a very, very good week in the markets. And then I was trading on my Funding Pips account this week where the markets weren't so great. But all in all, I'm still up, and this is going to get withdrawn, touch wood, hopefully next week. I think it's the 27th is the payout. And you get the like a nice bonus with this. I don't know if I can find it now, but if you go to Funded Next, they have like a bonus where you get like 15% of phase 1 and phase 2 or something like that. So it's brilliant, but let's wait and see if they pay out, because that would be great. I've got a 50K challenge that I haven't even started yet. So yeah, that's another thing as well. I am constantly buying more challenges. I am not even funded with FTMO. I've actually blown a few accounts at FTMO because that's what it is, right? You know, you don't win them all, but I understand how much I can be spending on challenges. I'm using my payouts to then fund more challenges rather than just buying loads, blowing loads. I'm trading each account with different risk. I'm trading each account with different currency pairs. I'm really, really diversifying my portfolio across multiple different accounts. Whereas most of you who are probably watching this, you're probably buying one account, trading it, blowing it, buying another account, trading it, blowing it. And I know what you're doing. You're hoping and thinking that eventually you're going to get to that live account, and then you're going to keep making profits and profits and profits. But remember, if you're blowing challenge accounts, there's a higher chance that eventually you're going to blow the live account once you get it. So you have to take that into consideration. How many of you think, you know, once I get the 100K live account, then it's just going to be profit every single month? You know, it's not. I've been very fortunate to be trading well my Funding Pips account to get 4 payouts. But as you can see, it's down right now. And I've expected that because I know that no one knows what's going to happen in the markets. You can have losing weeks, losing days, etc. And it's just inevitable that eventually you're going to hit those drawdown limits. It's not a live account where you can trade how you want, when you want, with whatever limits you want. You're restricted on these accounts, and you know, you have to deal with it and you have to accept that. But anyway, guys, enough of the funded accounts. I hope that was helpful in terms of advice of, you know, my own experience. Do let me know in the comment section if you want me to discuss anything in particular about prop firms. Let's jump onto the charts and I'll show you some trades that I took during this period, which enabled me to basically have the accounts where they are to get some nice payouts. So here we are on USD CAD on the 5-minute time frame. This was taken last week and it was sent into the group. I'll put the screenshot here, and also taken by myself as well. So getting into the analysis, this started on a 5-minute time frame, and to begin with, as always, I like to get an understanding of where price is heading, who is in control of the market structure, either buyers or sellers. When you are looking at these charts, in reality, it should be obvious who's in control of the market. You should be able to just look at a naked chart like this and be able to tell whether price is bullish or bearish. You shouldn't have to draw on lines and zones and all these different types of, you know, indicators to determine whether price is bullish or bearish. If it's not obvious and it's not clear, you shouldn't be trading it. The easy part should be understanding if price is bullish or bearish. The hard part is then determining when to get in and follow that trend. Okay? But anyway, for simple terms, let's talk about the analysis behind this trade. So to begin with, obviously we can see price was forming lower lows followed by lower highs. Okay? Visually represented by something like this, we can see that price was moving to the downside. Now I like to highlight the most recent highs and lows. So looking at price action, looking at the low points to determine when structure actually has been broken. So let's take a look at this. These are the high points, as you can see, the lower highs that price is forming. And then we actually had our last one down here. Okay, so we use our lower high points to determine when this market structure has been broken. And the market structure has been broken when the most recent one has been essentially broken through. And that has happened here. Okay, this is the most recent lower high point. And then this move that we had in the market here, that was generated from buyers, that is now our confirmation that price is bullish. Okay, so it was clear. I didn't even have to draw that on, but just to visually show you guys, that's why I'm looking for buy positions and why price is bullish. Okay, because we've now formed that higher high impulsively. Price is bullish. I want to be looking for buy positions. Okay, but like I said, you don't even have to draw it on to show you. Okay, this is just creating unneeded artwork on the screen. But yeah, price is clearly bullish. Okay, we're forming higher highs now, followed by higher lows instead. And we want to jump down to the lower time frames now to get in on our position. And I've been using the 1 minute time frame recently because I really like to get in and out of trades quickly within the day. And we've had some really nice movement this year, and I've been taking advantage of the 1 minute because the 1 minute time frame is quite clean. It can be clean. Obviously, if it's too messy, then I'll just jump onto the 5 minute time frame. But recently, the 1 minute, as you can see right here, super clean market structure. And for those of you who are wondering, like, what's the best time frame to trade? It's just whatever you are comfortable using, because price action is the same on every single time frame. Like, you're going to get candlesticks, wicks, like structure, breaks and retests, patterns. No matter what time frame you're on, it's always the same. For example, I could cover the time frame here, not tell you what time frame it is, and you wouldn't be able to tell if it's the 1 minute or it's the daily or if it's the 4 hour, because it's all the same, right? The only difference is if you're trading on the lower time frames, you're going to take more positions. But remember, more positions doesn't just mean more wins, it also means more losses. So are you actually capable of taking those more trades with more losses? Okay, higher time frame, you're going to take less positions, less wins, but also less losses. That's the way it kind of works. Anyway, back to analysis. So this is the strong impulse move to the upside that we had within the market. Nice move, breaking structure. And then since that, we had a big correction back to the downside. And as you guys know, I like to trade impulses followed by corrections. When price impulses to the upside and then pulls back correctively, I'm looking for the probability that price is going to make that bullish continuation, which it did here. Okay, so we can draw this on to show how price is trading within this bearish correction. Where did we pull back to? We pulled back to this zone in the market here. What was the early signs of a bullish reversal? The early signs of that reversal was when price began to form this double bottom within the market. A double bottom just implies that buyers are not allowing sellers to form a new low in the market, because as you can see, we're forming lower lows, lower lows, lower lows. And in this move here, rather than forming a lower low, buyers have stepped in and gone, no. Buyers have stepped in and pushed price higher. Okay, now, this time, another impulse move to the upside. Once again, breaking structure. This is the low point that's been broken. Notice the exact same thing has happened again. Broken through, pulled back, broken through. Now this is where I'm actively looking and I want to get into the market. How did I get into the market? Well, I was looking for price to obviously pull back to this zone here. Okay, I'm looking for price to pull into this level, to retest this previous level of resistance as a level of support. Now, most of you might be thinking, why didn't I get into the market over here? Because as you can see, we pulled back and we started to slow down, and many people would be looking to get in the buy position there, stop loss below the low, and then they're looking for that buy position. But why didn't I get in there? And it's purely because I used an extra confluence for this trade. Okay, I used my Fibonacci retracement tool, and if I drag it from swing low to swing high, we can see that this zone that we have, this level of resistance as support, lines up with the 61.8%. Okay, so that Fibonacci retracement level lining up with previous resistance makes that zone the most probable zone for price to pull back to. Okay. This one here, what reasoning is for price to pull back to there? Okay, you could say that there's this zone here, but not strong enough for me. There's no Fibonacci retracement level. The 61.8 is the strongest Fibonacci in the sequence. So for me, this was inevitable that I was going to be waiting for price to pull back to there. Then we started to get this flip in momentum. I took my buy position with my stops somewhere like that. And I didn't actually have a take profit on this one. I was going to be actively managing it, maximizing on my profits as much as possible. But anyway, let's see what actually happened. As soon as price broke through this zone here, I trailed my stops to break even, because at this point we've broken through structure once again. Price shouldn't reverse on us. If it does, I don't want to be involved in the market anymore. So we've broken structure, formed that new high. I've moved my stops to break even and I'm protecting my capital. Let's play price out. Formed a new low, pushed up. If anything, right now we formed like a inverse head and shoulders pattern. So this is just making this trade even more probable. We've got left shoulder, we've got the head, we've got the right shoulder. Could I have taken another position there? Yes, but I didn't in this instance. I should have potentially. But let's take a look at see what happened next. Price started to pull down. Now at this point, we can see that price is struggling to move higher. Look at the distance between the impulses that we're making. So this impulse here is about 7 points. And then if we measure the next move, this is about 5 points. So the impulses are getting smaller and smaller. So now that is giving me a confluence for sellers to want to get into the market. So now I'm actively thinking, okay, we're pushing up, but if buyers were in control of the market and wanted to drive price higher, they would be making bigger impulses every single time. When price starts to slow down, the impulses get smaller. It's evidence that buying momentum is slowing down and sellers are going to step in. But anyway, let's see what happened next. Okay, so this is where I got out of the market. I think you can see in the screenshot is exactly like a 1 to 3 or something like that around this level here. Because like I said, I saw these impulses getting smaller and smaller. So I just took my profits at this level. And as you can see, it was the correct thing to do, because then price came all the way back down. I think it would have stopped me out as well. Yeah. So yeah, great trade on USD CAD. Nice bit of market structure. Entering on the most high probability area for price to pull back to. 1 to 3 on this. Normally I do catch higher risk to reward ratios. I definitely would have if I scaled into this as well to maximize on my profits. And that's another thing I wanted to just quickly recap on is, you know, you guys might think, why am I not talking about losses? Why am I not talking about my losing trades? And to be quite honest with you, it's because my losing trades are just trades that look exactly like this, that just don't work out. And I don't learn from my losing trades. I just accept them as losses. Okay, there's 2 types of losses. You either take a loss that you learn from because you made a mistake, or you take a loss that is just part of your strategy that you just embrace and you just move on and accept. It's just a losing trade within your strategy. Okay, so yeah, when it comes to losses, I don't take my losses and try and change something about them every single time, because I know that's what a lot of people do. And what I used to do when I first started trading is I used to take all my losing trades and try find something to turn it into a winner, when in reality there's no perfect strategy, right? So you have to embrace the losses. And when I fixed my mindset and changed it from, rather than examining my losses to try and turn them into winners, I was examining my winners and learning how to maximize on those winners. So when it comes to refining my winners, can I make my stop loss tighter? Can I extend my take profit more? Can I scale into further trades? Should I be taking profits early? All of these things, because you can increase your winners. Yes, you can decrease your losses, but once you actually become that profitable trader, you shouldn't be taking unnecessary losses, for example, from emotions like revenge trading, silly trading, over trading, all these things. Once you become a profitable trader, It's not your losses that you need to be looking at, it's your winners that you need to be looking at to try and maximize. So that's just a bit of a tip, guys. Maybe if you're someone here who's struggling, stop looking at your losses, leave your losses as losses and just let them be, embrace them, and maybe start looking at your winners and see how you can potentially be maximizing on them. But anyway, guys, that's the end of the video. Probably a bit of a long one, to be honest, but I hope it was helpful. I really want to get your guys' idea on what videos you want to see. So let me know in the comment section how you found this video, please. If you enjoyed it, what you want to see, what type of content, any questions you may have, and hit the subscribe button. We reached 20K now. Hopefully we'll eventually get to 100K and beyond. I appreciate every single one of you who watch every single video and comment and support. But yeah, keep subscribing if you haven't. If you want to join the group, the link is in the description, and I will see you guys in the next video.